We should.
Good morning, Quasar Markets Live. How is everybody doing today? BigBeat, how are you doing, my friend?
I'm good. I'll tell you that just talked about this a second ago, Howard. The trepidation. My mom called me yesterday asking about Social Security. Look, I don't really understand that question. Is a trepidation? I think you used this word earlier. Why is this a problem? Why are people so nervous? What's going on in the world that's got people so enamored? And I think it's political, right? I
Yes.
think that there's a situation right now that people just don't know that they've upended and really are concerned. And how does that affect the markets? I mean, we're seeing that, right? It's like every little stair step to the upside gets sold off. People are nervous, and nervous money is not usually good money.
Yeah, I'm with you. We talked about it. The last few days I've been a little bit more standoffish as opposed to straight on bullish because I don't trust what's coming out of the White House to be consistent. One moment we're going to work together and we're going to get this and it's going to get people to the table. And then, some tweet that comes out of, wherever pisses off the president and he then goes into a rampage. And it's just not good for the markets. Like you said, I'm getting those same channel checks you are, family members concerned about their Social Security, about their Medicare, their Medicaid, all these things that we count on the government to provide for us, that they've always provided for us. And you and I both know, we both spent a lot of time in DC. We're talking to a lot of folks that are in different parts of the government. And I'm not just talking from the White House, from all the different components. We talk to people. And there's a malaise, right? That's, I think, the word I would use. There's a very big malaise out of, the public sector.
Yeah, I mean, I think the world, and it's not just our country; it's every country, right? This is not a U.S. centric situation, right? There's a central feeling that the world just isn't together right now, and people are unhappy. And I look at several factors, and one of them is consumer confidence. I posted yesterday about consumer confidence, and I wanted to show a chart if I can. Here, I'm going to present.
Pull it up the screen. I'll throw it right on.
Yeah.
And I will mention as that's coming up, like you said, it is across everywhere that you're sort of seeing that. It's not just in the U.S. There we go. Wrong one. Add to the stage. There you go. There you go.
And yesterday I looked at a few things, right? I wanted to see what the debt to asset ratio was, not of the country, but of people's net worth, at least in this country, right? And what I wanted to know was what was the debt to asset ratio? Not debt to what you're bringing in, but debt to actual assets, meaning and actually in this case your home value, your whatever value that you have. And I want to show this chart here. You'll notice that I brought this back for the last 50 years here, Howard, and this is consumer credit. So this line here, this pink line here, is consumer credit and other debt. That means your credit card. And when I see credit card debt, it's pretty high right now, but it's not nearly as high as what you're worth. And that is why that you're seeing even more credit being displayed out there. And then I wanted to overlay home mortgages, what people are, their debt, because if you don't know that, your house is not your asset until you own it. You're making a payment to the bank. That's just a little bit above, right? There's not much there. It's your biggest asset as a person. But then I wanted to look at household net worth and household assets. So your household net worth is like your family all bringing in and what money you got and your silver and your gold in your pockets and your things of that nature. And then your assets are everything else. And then I wanted to look at debt to asset. So debt to asset. So I'm going to pull up the next chart, and there you go. And I wanted to get a little closer in here around that. So I'm going to pull it right back so you can see it again. What happened here? Why did the debt to asset ratio drop dramatically in 1998, 99? And does anybody know? Raise your hand if you know. It's very simple, right? It is the tech bubble, right? When that tech bubble happened in 1999, the debt to asset ratio fell almost immediately. That it wasn't just the fact that people did not understand that the prices were out of control for stocks like Netscape and AOL that are no longer around, right? And all of a sudden, they just lost their behinds in the dot-com bubble. And I'm going to pull the last one up. Here it is. This is the dot-com peak right there. And look where we are, debt to asset. So people have gotten smarter about what to buy. They didn't have as many homes in 1999, right? Their assets were mostly stuck into stocks and to dot-com stocks. People are getting smarter. They're not completely just showing that. So debt to asset ratio has fallen almost flat down to minus 0.1. Or I'm sorry, 0.1, not minus 1, 0.1, meaning that people have gotten smarter about their money and investments. So I'm okay with this. That's why I'm saying that this is not the dot-com bubble. This is not where things are out of control, and things are much better. So people, while I understand the feeling, they didn't, a lot of the, well, I mean, let's talk about it. Gen X and millennials did not go through that dot-com bubble in a heavy way, right? You and I did. And we knew better and got out before that happened. We saw things that were outrageous. We're not seeing that now, right? People are getting a little smarter. They're not just taking their money out and they're putting it back in, right? You saw that with the retail traders that are actually putting money back in faster than institutions. So this debt to equity and assets, I like it a lot better. It pulls out the humanity as opposed to the institutional.
Right. Absolutely. That's a good point there, Steve. I will mention that sort of the big news of the day for me was Barclays came out, lowered its year-end 2025 S&P 500 price target from 6,600 to 5,900, making it one of the lowest forecasts across major U.S. Treasury dealers. And they gave, what I liked is they actually gave some probability cases, and they said that there's a 60% probability of that the economy slows without entering a recession. So, that's not that negative. You know what I mean? Is they're, while they're still cutting, they're not saying it's that bad. And then they're given a 25 case probability that that he retracts the tariffs and that we retest highs. And then a 15% probability that the world ends and comprehensive tariffs and everything else on Canada and Mexico upset everything. So, what we're leaning to is what most of us are here is, be cautious. The world isn't ending. Value is to be found. There is value in the markets if you're looking as a stock picker right now. And as a day trader, you got to be more nimble. We've been preaching it for weeks. Be nimble as a day trader. I did think it was interesting, too. They upgraded financials due to the potential benefits from policy shifts towards deregulation. They downgraded consumer discretionary, which would make sense right now, in industrials. So we are seeing that downgrade hit the markets a little bit, and they pointed out that Europe would slide definitely into a recession if these tariffs come on. So the CEO of Barclays Europe indicated a 25% tariff on European goods could potentially push the Eurozone into a recession given the substantial export volume to the U.S. And like we've talked about, this is what they want to work on. Good morning, Ron. Hope you're having a good day there. I do want to give a shout out. I got some social media messages from Jay and his son Arnold that watch us. Jay and Arnold, I hope you're doing well there in Tip City. Have a great morning. Steve, I'm going to switch it over here. Let's talk a little bit about GameStop. Did you see that they're going to add Bitcoin to their treasury? I might have called this out yesterday to keep an eye on this.
All right. Corporations and companies and countries that are adding Bitcoin to the treasury is a good thing because it starts to bring out a little bit something different. What is the difference? Well, a lot of the complaints about Bitcoin that are not people who in Bitcoin are saying, hey, I can't spend my Bitcoin. I can't do anything with my Bitcoin. Well, you know what? When companies have Bitcoin in their treasury, that means that they are going to accept your Bitcoin, and not just in a way that's the credit cards, not just in a way that you can put it in your pocket, but that they're saying that, hey, you know what? Bitcoin's good enough to be able to be in as cash in my system. I trust it enough as a company to trust it enough that I can not lose my money. That is what the faith and good credit of the United States dollar does. It makes it easy to transfer. So when you buy a game on PlayStation, or you buy an Xbox at GameStop, or you buy these things, now you're going to be able to use your crypto. And I think it's just the beginning, and I think it's a good move for them. And they should do it before the 21 million of the Bitcoin are gone, right? As major countries and states are now adopting it. So, look, Hondo, you and I have gone through this for the last, I don't even know how many years now. We've been in Bitcoin. I've been inside since $75. Watching the adoption of this has been a roller coaster, right? But you're now seeing companies that are saying, okay, I feel comfortable enough to be able to put this on my treasury that I can now implement this. I don't think this is just about Bitcoin. I think it's about all crypto. I think it's going to be about every game, in this case, taking microtransactions. I'm buying a game. I bought a game called The Finals not too long ago. It's a game that Xbox now gives out for free. It's on Game Pass. But guess what I did? Inside the game, I bought some coins, right, so that I could have a better gun. Well, I would love to be able to spend my Bitcoin on that gun as opposed to spending my dollars. Why? Because maybe Bitcoin's higher than the dollar is right now. Or maybe I want to spend my yen because the yen is a better situation. I think this is a much better. It puts the world a little closer, and I think this is great. And I think this is good for GameStop's bottom line. I think GameStop made a good move here.
Yeah, I agree that it's a good move for them. That, as we've talked about, they become more and more irrelevant as a store every day. In fact, they talked about cutting their stores still. Getting to Bitcoin and what you're saying there, there's for me, there's a couple of things. We were joking about Peter Schiff the other day. I think it was either yesterday or Monday, about how he said he has Bitcoin and shared his wallet for people to send. What was interesting is number one, people send him Bitcoin, which I don't understand. So I need to start posting my wallet, because if people are just going to send people Bitcoin, I am more than happy to take whatever extra you have at any point. But one of the jokes in there that came across was that, what he was doing as a spoof now is showing him the power of Bitcoin, because he's getting these microtransactions of $1 that are happening instantaneously. Someone said to him, "Hey, Peter, how long would it have taken me to send you my $1 of gold?" Because his Bitcoin came in a matter of seconds, and Peter acknowledged that it had come across. So, it shows the power of what it does. The instantaneous and finality of it is what is, draws a lot of us.
Yes, but what did it cost him to send that dollar? I think that's what we need to figure out down the road, because there is some limitations, right? When I use my credit card, it doesn't charge me. It charges the company that I'm buying the product from, right? So there is right now that Bitcoin costs me to send it, and it costs them to accept it. So
it doesn't cost to accept it.
Well, I mean, send it. But when they send it out to buy product or to change, that's when they have to spend it, right? Whereas on the credit card, it doesn't work that way.
But if you're using the Lightning Network like you should, you're paying a 1/100th of a penny. So you'd make 100 transactions or 1,000 transactions.
Is GameStop doing that, though? Are they using the Lightning Network?
Smart people are, yeah. And most companies, companies that are doing things like this, most of them are. And again, if you're trading Bitcoin, you can do it on different exchanges that allow you to do it on the Lightning Network, for it, or you can buy using the Lightning Network on Cash App, and, very easy ways that you can get to that market. And that is the future, though. I guess what my answer would also be, we're not fully there yet, like you're saying, but we're at a spot, where I saw there was a big article in the Wall Street Journal recently that was comparing the costs of sending money across the world with all the different ways, whether it be crypto and that, Solana, you get in at, less than 5.7 cents in that area, $1.13 or so for an Ethereum. Base was a good one. Coinbase's system is a great way to send money, and that people are using and that's what we're seeing with stable coins, right? Why do you think there's been such a rush, Steve, by the Trump organization to make a stable coin and others to get on that stable coin XRP, right? Ripple came out with a stable coin. Why? Because it's going to be a quicker and easier way to do it. As you know, though, the other answer is there's risk involved when you send money using some of those other services that there's clawbacks, right? Yeah. So you send something on PayPal and then you can pull it back in some of these other ways. You can't do that with Bitcoin, right? So it's also the finality that's involved in it.
I find the irrelevance. It's interesting that the president has gone out of his way to say no CBDCs. And then yet creates his own.
And then creates stable. That's why he said no CBDC. I mean, listen, we all know that the White House is rather self-serving and worried about that. And most of government is. We know that. Look, the nepotism. This isn't the first time we've seen nepotism. It might be the greatest misuse of nepotism we've seen, but we've seen this for centuries. It's pretty bad, yeah. Unfortunately, man, that's not good. And that's what's got us down. I think threat of war definitely has a lot of people down also. So, we do have to point that out. We are about 15 minutes from the open here. And so far, tick is pretty muted. We're down slightly here. Advanced decline is positive at 885, but that usually means, quite honestly, a negative open on that. And as we see the Qs so far get set to open down about 9 basis points, the SPY down about 4 basis points so far. Bitcoin holding up around 87,600 here. I did see our man Jeremy Vreeland has a very similar short-term target like I do at 88,600. So right around 89,600, excuse me, same area that I do. So we'll see if we can get to that this week. Gold really staying pretty stable too, Steve. 30,024. I mean, I guess my question would be, nothing's really moving, right?
Right. There's a couple things going on here today, but one of the things that I really want to see today, I really want to see a better feeling out there than we are right now. And we're not seeing that. And I just looked at the numbers here for Canada wholesale sales. coming in at 0.4% versus 1.2% previous. That means that companies that are reselling the product, let's think of it like Costco's and the Walmarts of the world out there, are not restocking the shelves at the same rate that they were, and they're not buying things at the same rate that they were. And I was just watching the layoff tracker, and the layoff tracker is picking up. So, are we in the beginning of it? Yes. Are we in a recession? We have changed the definition of recession so many times around. We pushed that envelope and that goalpost so many times. Remember during COVID? No, we're not in a recession. Yeah, you're in a recession.
It's not 2 quarters of reduced GDP, even though my textbooks have that very clearly written in my economics textbook from Econ 101.
Yeah, my education says that, right?
I mean, I know I might not have had the greatest Ivy League education like some others, but I would say that was the first thing I learned in my first day of econ was the definition of a recession. And up until 2022, it never changed.
Yeah. Look, I'm looking at the oil numbers now, and 69.71 barrel for light sweet crude. That's telling me that okay, that there are people out there that are not too worried about it. We still have to move things around. Look, sanctions are going to hurt oil, and no doubt about that, right? When you move oil around. I did see a thawing out where over the yesterday, late last night, I saw that some news come across that Russia was going to get some sanctions lifted on agricultural products, right? I don't think that we should hurt the Russian people. Food is a necessity, obviously, and that's a starting point, right? We have the sanctions on Russia don't work. They have not really worked. Why? All you're doing is you're just punishing the people of Russia. You don't think that that Putin is still eating fine and having a good time? He don't care, right? It's not hurting him; it's hurting the people. So we need to have a much more thoughtful discussion about how to keep things in line, and we haven't done that yet. So I volatility now at 17.19 the VIX. So people aren't taking their money and running, taking their football and going home and saying it's my game. We're starting to see that money come back in. So look, maybe the world is not as bad as we think it is, and maybe we're coming out of it. So I'm okay with this, right? It's still March Madness. There's still some time. We're getting the thick of it now, and volatility is slowing down. So. Okay.
Well, I guess my question to you would be, I just think we're stuck in this till April 2nd. I mean, I just think until that day comes and the tariffs either hit or don't, I think that we're going to see a muted response right now.
Right. I think let me ask you, what is April 2nd?
Well, it's just a date, but I think that date, right. Will he kick the can again? But I think that's what everybody's right now.
I think in talking. That's right. I already hit the nail on the head there. That April 2nd. It was February 3rd. It was January 20th, is what he said, right? And he moved the can, which smartly moved, right? He's using it as a bargaining chip. Okay. I still don't agree with it, right? Tariff war never works, never has worked, and it never will work. It just doesn't. They put a tariff, we throw a tariff, they put a tariff, it just builds up and then nothing happens, right? And then we put the markets in turmoil, right? And CNBC.
Let's expand on that a little bit. I do want to get back to the VIX because, quickly I want to say on the VIX before everyone asks us again. VIX is at a level where if you are looking to buy protection versus upcoming volatility, this $17 area is a very nice way to do it. How do you do it? Some people have been asking me that. You would look at something on calls, something in that 22 level that it tends to spike up to, that you can see on all these little spikes over here, all run to about that 22 level. This isn't just something that I look at, this goes back all the way into September of last year and beyond. 22 is that level to look at. You'd be looking at a dated call somewhere in April, mid-April to late April there. Is something that's what when we talk about it, I had it, someone reach out to me and say, hey, you guys talk about this stuff, but I don't fully understand what you're saying. When you say get that protection, that's what we're talking about. When it spikes up, you sell it. This isn't meant to be held forever. It's not to be meant to hold to expiration. It's meant to be held to the next spike in volatility. remember, this doesn't mean that it's going to be downward volatility, right? It can be great volatility to the upside. If everything starts hitting and the tariffs are gone, volatility still does the same thing.
Yeah.
So I just want to point that out. And getting to the tariffs, one of the things that gets often overlooked in tariffs is service trade, is all of the financial services that we provide to other countries, telecommunication services, digital trade, things like that. We have a trade surplus in the area of $278 billion in 2023 on that. And that doesn't go into these figures when we talk about tariffs, right? So it's something to keep in mind that's really at risk here, because that is the money that I think is at risk, because as sentiment builds up against the U.S. and the administration, that is at risk. And I also want to point out that foreign earnings, U.S. companies earned $632 billion from overseas operations, indicating substantial foreign investments last year. So these are things that are sort of being left out. Everyone looks at what's going to happen to an orange or what's going to happen to a car. Those things are important, but the U.S. is the major exporter of services to the rest of the world, right, Steve?
That's right. Yeah. Yeah. And I was just reading, for those of you who don't know, if I'm looking around, it's because I have these huge screens everywhere. But, one of the news pieces that I really thought grabbed my attention this morning, and it wasn't one that I thought was normal, is the diplomatic relations that are going on right now. The first one is Marco Rubio is going to be going into the next today and tomorrow down into the Caribbean. And President Trump has been invited to Australia. Those two things to me tell me that the world is willing to work with us and get this done and move forward. They realize that he's going to be president for 4 more years. But there was something that happened last night. Last night was an election night in the United States for some certain key points, right? One of them was in Pennsylvania. There was a district in Pennsylvania that was plus 15 R, meaning that the president won that district by about 15 percentage points. And the absentee ballots and the independents came out in full force, and a Democrat picked that seat up. That malaise might translate into serious damage in the Republican Party, and I think that what the Republican Party will hopefully do, and that the Democrat Party I think has done with Chuck Schumer, is starting to come together a little bit. If that happens, Howard, and I think it is, and we talked about this 3 weeks ago, then I think the markets go back up. People feel better about everything, and then we go back to normal business. And I think that's a good thing, right? I think people are saying, hey, this is not what I voted for, right? Or other countries saying, look, we're going to work with you. That's cool. Then the Trump administration can say, hey, look, I know it's chaotic. I know you didn't like what I did, but I'm a businessman and I understand business, and this is how business gets done, and this is what we did. So, okay, good. If it doesn't work. You threw the dice. Okay, you threw the dice, but you're not playing in a business anymore. You're playing with the leading country in the world. So there's a little. That's why I feel like I'm okay with it, and that's why I think that gold is at $30.24 an ounce and silver at 33. I mean, silver almost hit $34 an ounce here. I'm still on it at 43, right? So. Yeah, I'm not too concerned about anything. We got about 4 minutes now to the open. Let's get to the stocks. I think everybody's wanting to see some stocks here.
Absolutely. We got to talk about Boeing to start off with. Boeing had been doing really well this week. We had seen a lot of moves up after they won 2 contracts, one from the Navy, one from the Air Force. They are going, though, now to stand trial on June 23rd in a criminal case related to those 2 737 MAX crashes. Has it down slightly, not really affecting the market too much so far, but Boeing has been all over the news lately. Most of it has been on the good side. Switching over to the MAG 7, NVIDIA under a little bit of pressure today after Chinese regulators are discouraging local tech companies from purchasing NVIDIA's H2O chips due to energy efficiency rules violations. This could potentially impact NVIDIA sales in China. So they are down here. NVIDIA's down about 1.8%, down at 118.52. So we'll see you there, but a little bad news on them. Tesla, same thing, a little bit of bad news across there has them down about 1.52%. Analysts have revised Tesla's Q1 2025 delivery estimates, and they downgrading it, as they talked about, is changing brand perception, which is not good for the market or for Tesla. So a couple there. On the other side of the spectrum, you don't really put these two all together, but Dollar Tree in the news today, they are going to spin off Family Dollar. They bought it for $9 billion, excuse me, and they are selling it for $1 billion. So they're going to take their loss here. Had it down. That news came out late yesterday, so they're down about 4% since the news. UPS here, another one downgrade. Steve, I think it's an overall theme that I've just seen. Is most of the news has been fairly negative this morning. Again, the sky isn't falling, but it just seems that every time we turn around, there seems to be another news cycle that is just sort of beating everybody up. I've noticed that, we were talking about down detector today. That was down. And so many of the major industries, it just seems like North Korea or whomever, Iran that might be behind it. It seems like there's a lot of state sanctioned.
And why are we not going after North Korea? We haven't even talked about North Korea. I mean, that's ridiculous. Why?
I mean, it just is. I mean, how many times has Twitter been down in the last few weeks? How many times have we seen? We were looking today. We both use Spectrum for our internet, so if we do get any delays here, we do apologize. But both of us were noticing some lag time there. T-Mobile was under attack today. We saw, just so many of them that it seems are under these. But with that being said, UPS got a downgrade from Bank of America from 133 to 129. Isn't really affecting the market yet. On the better side, though, Worthington Energy or Enterprises, which is in the energy sector, they actually were moving up earlier today, up about 6.73 this morning. They had an EPS beat, and a slight revenue decline, but they, overall good earnings. Nice move to the upside here on Worthington. I know they're one of the ones you like, right, Steve?
Tick is down 439 right here on the open, and it's just starting out very negative here. I think that I don't know. I think people are wrong about it this morning. We talked about how negative everybody is, but I like buying when people are negative. I don't.
Yeah, I don't disagree with that. Like I said, I think today you might see an opposite effect here. You could see a move to the upside. I think you're going to see you're seeing a little bit of selling.
Yeah, I think it's a buying opportunity here. I mean, for me, I don't have to know somebody about to buy or sell, but the dollar is pushing up a little bit, 104.45 here. Well, see, Flanagan's been calling that one dead. He's been dead on with that one.
He will be at 10 o'clock today.
Yeah, it ticked only down 200 now. So, the early selling is a little. So Barclays now saying that Trump may slap reciprocal tariffs on as many as 25 countries on April the 2nd. It's according to Barclays again.
Wow. That's what's moving the market down. That's what I'm talking about. And everything seems timed, doesn't it, Steve? Isn't it interesting that Barclays comes out with that,
right at 9:30. Yeah, right.
Because let's point something out. Barclays is not a U.S.-based company. They are a England, UK-based company, so it isn't like this is their 9 a.m.
Right.
That just seems a little targeted, in my opinion.
And I think that there you go. It's almost there, right?
Yeah. SPY's trying to go positive here, at least to start off with. Tick is still negative about 300. Advanced decline sitting positive 500, but not really in that positive zone that you really want to see. Take a look at the Mag 7 here this morning. So far, this is the exact opposite of yesterday. Yesterday, we saw all 7 of the Mag 7 up.
GameStop like 14% now. Woo.
We see all 7 of them on the negative side here, but I expect to see these start to flip over here. So I do think that we're seeing some initial sell-off here, and we're going to see a move to the upside. SPY did just break through the VWAP here, regain 57.50, moving up rapidly here. So we are seeing some buy and step in, Steve. So at least across the SPY. Qs is not the same, still down about 17 basis points. RUT continuing to move up. RUT trying to break 2100 today. That'd be a pretty positive move for them.
Yeah.
And for those that don't know, the RUT is the small cap.
It's about to go positive here.
That's what I'm saying. I'm not
We're
worried
hearing
today.
reports now that OpenAI is discussing building its first data center for storage.
Yeah. Steve, I will also point out I've seen a lot of articles coming out this week about Schneider Electronics and Carrier both being big winners when it comes to data center. I brought that up as soon as NVIDIA released that information and had their go to conference, right? That
I would also say
GTC.
Honeywell.
Because they are the partners with NVIDIA for all of these data centers that they're going to build. They are providing the heating and cooling for them. Again, that's Schneider and Vertiv. Vertiv is Schneider. You can't trade. It's overseas. You can, but it's harder. Vertiv would be your play here for that type of thing. VRT. Would be an interesting one to keep a look at. Again, they were mentioned directly in the NVIDIA keynote speech as being the partner for their cooling and heating HVAC systems. So very important, in my opinion. Steve, one of my favorite companies had some pretty good earnings. Chewy. Always a good one. I think they are one of the best customer service companies in the e-commerce center. They had a nice little beat here, adjusted earnings of 28 cents. It was estimated to come in at 21, so a nice win here. It has them up 3.21% here. You a fan of Chewy, Steve?
I used to buy a lot of my product from Chewy, but now most of it comes straight from Amazon. Yeah, I mean, people are spending more time at home. They're going to spend more time with their doggies and their pets. So, yeah.
I wonder how Chewy's getting affected by, or I haven't done any research into how, like, the fresh pet movement and all those things where you order directly from a company, not from necessarily, Chewy to get it, if that's what that's doing to their business. But I do think, we know the amount of money being spent on pets continues to grow and grow and grow. So it's one I will definitely be keeping an eye on. Let's take a look at the early morning pumpers here, see what's going on. Most of them are actually retracing here. It looks like HAL. Someone brought that up yesterday.
Getting slaughtered right now.
Halliburton, one of the big winners here, Steve, 1.28% today. You called them out yesterday, right? They are going to be a winner when it comes to the arms races, so to speak.
I mean, the good old Dick Cheney company. Look, Halliburton supports war. That's what they do. So the more wars, they're happy. Yeah. So
moving to the upside, as we said, look at that sell-off on Dollar Tree, Steve. We'd seen them move to the upside on that news of the sell-off of Family Dollar. Now It seems like that is not moving the market the way it was. And I got to say, a lot of yesterday's laggards are now moving up. You can see KBH, which is KB Homes, up about 1.59% here. We know they were beat up pretty badly yesterday. UNF, which is UniFirst Corporation, they had a failed takeover or merger with Cintas announced yesterday. They're up almost 1%. And then the big one, GDS Holdings, up 3.11% here today after being down yesterday. So we are seeing a bounce back by a bunch of these here today so far. When we look at the Mag 7, wow, we're moving more to the downside. NVIDIA now down almost 2 percentage points here. Apple, the one that is moving to the upside. Tesla giving back some gains. Again, Tesla has been up so much over the last few days. Not surprising to see a pullback here. Some of these are healthy pullbacks.
Positive. I mean, we're positive by 100 here. I mean, that's I think we might be seeing a bear trap this morning.
Yeah, I don't argue that one. As I told you, I had sort of changed my mood while I am dour on the fact that this news cycle is just beating the you-know-what out of us on a daily basis. Yes, Ron, absolutely. SPX moving up nicely. Let's start to look through some of these sectors here. Banks moving up. Again, if you're listening to Barclays, banks will be, and you know what, I've been talking about this, the deregulation and the move by TradFi into the digital asset space, I think is a positive for some of them. So the JP Morgans of the world, especially, that are adopting it, the Goldman Sachs of the world, Schwab, one I like really a lot, all moving up nicely. I'll tell you who's getting beaten down is Mr. Buffett. And what I mean by that is MUFG, SMFG, some of these high flyers he got into recently announced, bigger positions in the Japanese trading houses have gotten hit a little bit here over the last week or so. So they're down this week.
Hearing that China's vice premier has spoken with the USTR office. That's good. So maybe things are going to start to thaw out a bit here.
Oh, and we talked yesterday. There were a lot of U.S. CEOs that were over meeting with him this week. So hopefully we do see some movement there.
Yeah, look at that. You're seeing a pop everywhere here in the market. So tick now 200 here. Exactly.
I will say chips are a mixed sector here, one of the most mixed sectors. You can see Micron's up 2%, NVIDIA is down 2%, and we've got everything in between. The big four are all down, AVGO, TSM, and ASML, all down here. So we'll see if chips will turn around. Crypto companies, most of them are slightly down here. MicroStrategy down about 70 basis points. The miners pretty flat. The ones have been getting beat up the last couple of days, Cores, CORZ, which is Core Scientific. This is a continued 2-day drop by them, so they're continuing to see a loss here. Most of the others fairly flat here in general. Hut actually on the upside. Restaurants, big winners today. Steve, I'm a little surprised by that. McDonald's up almost a full percentage point here. Yum China up 2.77% here today. Texas Roadhouse up, Wingstop up, Sweet Green up. So nice move by restaurants. Healthcare also starting to recover a little bit here. UNH back over 515 today. So I'm sure our man Paul Valleja very happy with that.
Yeah, I mean, I think that things are. I mean, Bitcoin here at 87.8 again here. Is there a struggle bus here at the 88 handle here?
I mean, again, I'm, sort of like you're saying with the markets, I'm not nervous about anything that I am personally seeing right now.
Look at that VIX, 17 now.
In Bitcoin or crypto. Big winners so far right now. Cintas really moving. Again, we talked about it. Cintas was looking to acquire Uni. They are no longer up about 9% today. Liberty Global up 4.14%. GDS, I mentioned a little bit earlier, up 3.64%. None of the other sort of major players. I do see AI getting a little love here with Rigetti, IQIYI, which is IQ. So a little bit there. Li Auto up about 2.15% here today. Goodyear, nice little move to the upside, up 1.98. Micron, like we talked about. CarMax up 2% here.
87.9 now back on Bitcoin.
Really a wide swath of different things that are up here, Steve. It's not really one industry. It's just sort of across. Biggest losers, I mentioned Core Scientific already, a Bitcoin mining and data center company. Trump Media pulling back significantly today, 3.24% after the big move up yesterday. Mobileye continuing to get hit here. MBLY up down another 3% here today. And Marvell, which is one of my favorite chip companies, down 2.75%. We'll say on the other side of Rigetti, which is moving up today. Pony AI moving to the downside. Little surprised to see DraftKings down 2.31% here today in the middle of March Madness.
Yeah, I mean, people aren't betting on sports right now as much, and brackets are busted. I mean, we already know that, right? Wow, both sides agreed to maintain communication on issues of each other's concerns. Wow. Okay. That's a much different situation there, I think.
As you mentioned, looking across crypto here, Bitcoin back at 87,800 or so. Ethereum has been able to hold above 2,000. It's good to see that. Ripple trading at 243 here, slightly down. Wow, it's amazing to say Ripple down at 243. Solana is the one that still hasn't had a good recovery at 144 here, up slightly today. Your Doge, Steve, up about 5% today, almost 20 cents.
Yeah, that ain't my Doge.
What is up 9%? You haven't talked about your Shiba lately, Steve.
Yeah, look, I think we talked about that this morning, earlier today, right? Gaming, right? GameStop, and I think Shiba is one of those that I do like. I do own it. Obviously, everybody here knows. It is my favorite because I think they have an ecosystem that they're trying to build out, and I like ecosystems. I think that's where it's at. Oh, here's a go. Russian oil here. We're hearing reports now that Russia's Novak says that their oil station is currently being restored. It's too early to say when work will be completed. I think that the ceasefire is going to help out too a little bit with everybody feeling bad about Ukraine and that. So there you go. GameStop back up 10% here again, trying again.
So they like that Bitcoin buy. Market Shark is asking us, is the slowdown due to March Madness, or are we all waiting for April 2nd? I think it's a little bit of both, but mostly the April 2nd. You know what I mean? I do think March Madness a little bit, but today, I don't even think there is any today. What day? I don't even know what day of the week it is. No, it is Thursday. Yeah, it starts today again, back up. But not as big this week as it was last week.
No, today's Wednesday, yeah.
It is Wednesday. I was right the first time. I don't even know what day it is. So, yeah, not today, but I do think it's just more waiting for that April 2nd there, Market Shark. That's what we were talking about a little bit earlier this morning and feeling that way. Try to look through here, see if I see any trends starting off here.
We do have some oil numbers coming out this morning, and that I will be watching for those oil numbers. That is something that I really do want to keep my eye on here. At 10 o'clock here in about 15 minutes.
I do. Does look like the Chinese name stocks are moving up here today. We know they got beat down pretty bad yesterday. So that news that you just brought up looks to be getting disseminated across the markets. We see BABA up about 35 basis points here. Baidu up 1.78%. JD up 1.4%. NEO up 46 basis points. And lastly, but not least, is PDD. Actually, Temu's actually down. So Temu, the only one bucking the trend there. Palantir, Steve, almost back up to 100 here again. When that thing dropped down, I said I liked it in that 80 area. Now back up at 96 here. SMCI continuing to get beat up here, down 1.65. See if anything else is catching my eye. I will say DXY is climbing up to that key level. 104.40 was the area Mr. Flanagan talked about as being that key resistance to keep an eye on here. It is right at it. So this is make it or break it time when it comes to the U.S. dollar. A break above this, he had 105 as the next target. So we are seeing, Ron, we're seeing a little bit of a sell-off here. Most of it here. Mag 7 is the one that's I thought the Mag 7 would start to drive us up here this morning. It hasn't done it so far. That seems to be the laggard.
I'm just not scared by any of this. I'm just not scared by any of this. I just think that people are just watching and waiting, and they're 87,950. I think you just gonna stay positive, stay relaxed, and
I will tell you, I like NVIDIA on a pullback to that 115 level here. You get a 115 level. I like NVIDIA in that zone. That's been a pretty good spot of support here and decent price action in that area. So I am going to keep an eye on that again. 115 would be a target of mine, maybe to go long on NVIDIA here.
This morning's durable good orders numbers, which was a beat because the expectations were so low.
Right. And everyone's trying to jump ahead of the tariffs.
Right. But I thought that the biggest numbers that I looked at this, of course, obviously defense, aircraft, and parts are way up 9.3%. I thought that it was electrical equipment and appliances were up 2%. What were they buying? Were they buying the Samsung washing machines to get ahead of the tariffs that aren't coming until April 2nd? I don't know, but that was a big one. Yeah.
So it's going to be interesting, Steve. I did see, I think, I'm not sure if it was on Bloomberg or CNBC this morning, but, I talked about it where I had heard some French importers, friends of mine that work in the wine business, that said, we're just not buying right now.
Right.
We can't afford to take this chance that this tariff goes away, And
I think that's exactly right. They're absolutely right. It's about taking the chance. That's what business is about.
No one's willing to do it right now. They're doing the opposite. And what I was going to say is I saw on Bloomberg or CNBC, they were talking about florists who get a lot of their stuff from Mexico saying the same thing. I'll be out of stock. There's nothing I can do because what I can't do is buy it with a 50% tariff. The tariff goes away in a week. No one rebates me that 50%. The government doesn't go, here's back your money. And now I own this stuff at a place where I can't sell it competitively. So that wasn't what we saw in the first Trump. And at least on the wine side, I can tell you from my experience there. So that has me a little bit nervous also here. Seeing SailPoint get hit hard here, Steve, down 5.73. Seeing a few things get hit here. SailPoint, Marvell now down 4.71%. Credo Technology down 4.43. So we're seeing the technology sector. Arista Networks down 4%. Aurora Innovation. All of these have just jumped into the biggest laggards on the day out of nowhere. So we're seeing a little bit of a sell-off there across the tech area. Whoa, we got a big flyer here, Steve. I haven't even heard of this company. Playtika Holding Company. You ever heard of them? PLTK. Up 21.58% here. And these aren't penny stocks. This is a stock that has at least a market cap of $2 billion. The only things I look at. So up 21%. Let's take a look here, see if we can find any news on this one.
Silver dumping here a little bit. So that should push a little bit the markets.
A packaged software company, and I'm not finding any news on them yet. So that's interesting. Up 21% here today. Here we go. News, just an upgrade from Bank of America. That's not enough to make this move that much. Yeah, that's all it is. A couple of upgrades. Wow, up 21% on those upgrades. Man.
Maybe just some short covering there a little bit.
Let's see what else comes up as our movers here. Playtika, BRP, another one, DOOO, that just jumped up 11.93%. We talked already about Cintas and Liberty Global. So those are the ones that are moving the most here out of sort of nowhere. Iridium Communications is now up 2.66. That's a new one here. Paychex, one of my favorite companies. I like getting those. 3.31% here. So they got a little bit of good news. And now people, Steve, I want to talk about dystopia of this market. Dollar Tree now up 3.44 again. It was just on. It was just a few minutes ago on our biggest laggards of the day. Now up 4.14, and you can see it moved up from 65.12 as the low of the day. So, man, these markets are very dystopian right now.
It's fickle. I mean, this is
it really is. I think that's the perfect line for it. There's no other way to do it. It's a fun market. I mean, you can make a lot of money on this volatility. You just got to be quick and nimble and find the ones that are getting volume pumping into them. You know, is definitely what we want to make.
I mean, AMD was pumping here a second ago, now dumping, right?
Yeah, that's what I mean. Is they're so quick. Wow, Nvidia down 3% now. It might get to my 115 target here today. Mag 7 really getting beat up. Outside of Apple, up almost a 0.5 percentage point. This is first time in a long time that I've seen Apple outperforming the rest of the Mag 7 also. And as I've said that, it's because Apple stocks declined 10% in 2025. As I look at the headlines just below it. So that would make sense as to why it is getting that recovery, but a nice move to the upside.
And we've been talking about the VIX for, I don't know, all morning long. And here it is, 1760. You could have got it around $17. Now it's up 7.
And that's what we're talking about. And when it comes to making, calls, if you were buying the calls we talked about, that will move that needle pretty quickly. Ron, you have arthritis. I'm sorry to hear that, my friend. We're all getting old, buddy. I mean, we've been doing this for too long. You've been doing this for 10 years with us. We're all getting older, my friend. Steve, I'm trying to see if I find any value outside of NVIDIA so far. That's the big one for me that I'm keeping an eye on so far here today.
The advanced decline ratio is now sitting at minus 65. I mean, this is not an overwhelmingly negative market right now. People aren't, they are feeling not great, but it's not terrible negative.
I'll tell you what, I'll keep an eye today on Carvana on this pullback too. I do think used cars are definitely seeing an uptick here, as consumers can't afford the mortgage rates, the rates on
big dump there in Bitcoin. Somebody just dumped a bunch of Bitcoin. Hearing reports that the Norway's foreign minister there now is going to shut down their Sudan embassy due to a deteriorating security situation. Another country falling into disrepair. That's we do need to keep our eye on Sudan.
Absolutely. Steve, does Oracle start to get interesting at any price here for you?
Not yet.
I know it's been one that's got hit. I mean, we've seen what their new AI, they should be a winner here. I could get interested here. The problem here, it closed the gap already. Steve, what do you think about this chart? I'd love for you to take a look at this for me. Do you want to pull it up on yours?
Yeah, we can do that.
Yeah. Why don't you pull up Oracle OR? Well, I'm going to tell you a ticker. I lost my mind this morning, sir. Give us 1 second to get this one pulled up, but we want to look here at Oracle. Because to me, it filled the gap to the downside already and now moving back up. It might be an interesting one. NVIDIA now down 3.26, 3.27, still moving to the downside here.
Yeah, and for those of you, I do have large charts, lots of numbers, things going on in my stuff. But yeah, I see this just drop here on the 1 minute chart. I can go down to the 1 second chart here. It just seems that on the 1 second chart that there's a lot of, you saw this back here earlier this morning on the open here, that people were starting to sell here a little bit into Oracle. I want to pull up a 3-hour chart. Why am I using a 3-hour chart? As you might know, yeah, that's what Wall Street uses. And there's your 3-hour chart, and you're starting to see some selling here. So this dump here is right on that 3-hour chart. So I don't, yeah, you can see here. Yeah. I think that their cash flow, I think a lot of companies right now are looking at cash flow. And for me, Oracle's cash flow is slowing down. But you're not really seeing a lot of volume here. I'm not really seeing the volume. So it's not, to me, it's not really going, ooh, look. Yeah, I don't see anything in here I like. Pull up a weekly chart. Yeah. I wouldn't be shorting it. Let's put it that way. I wouldn't be picking it up yet either. Let it.
So you don't like it from where it's at? That's
no. I think that it's in no man's land right now.
We do have tick picking up in the wrong way here, down 200 again. We've seen the advanced decline now go negative 400. Q's down 58 basis points. SPY down 22. We do see a slight move to the upside by the Dow Jones so far, but overall, we're just not seeing much positivity come into the markets yet. Take a look at the early morning.
And that VIX just jumped again. So
most of the early morning flyers are giving back some of their gains. KMX, which is CarMax, is the one that's up 2.2% here. Yeah, not seeing much value that I like here. I guess I'm stuck on NVIDIA. That's the one I'm going to be watching here today, Steve. I think personally is NVIDIA. If it hits this liquidity zone down and below that 115.79.
Yeah, the VIX just took off. Look at that. If you were listening to us this morning, you nailed the VIX this morning.
Yeah, $0.50 to the upside off those options is a nice gain. Oh man, Steve, gas continuing to go up too. Steve, it seems the eggs are finally subsiding, right? And what I'm also hearing complaints from my father and everybody in my family about is how gas is back above $3. So I do think that's one that we got to keep an eye on also.
Yes, most definitely.
See what else is moving around here. Delta Airlines.
And look, it's very simple. Tick down 500. It's very simple. As I always say, the markets is about one thing. What is it? It's about the path of least resistance. And right now, they were having a terrible time getting to the upside, right? And because of that, right, that I felt like that the markets were okay. But this is, Bitcoin now at 87,000. We were testing 88 here earlier, and down 1,000 points. I mean, that's the kind of fickleness that the markets have right now, and I just don't like the fickleness right now.
And like you said, what I would point out is, as Steve talks about linear regression a lot, we use it a lot, and it really gives you a great thing. What linear regression does is it tracks going back. You'd set how far it goes back, but usually 20 sessions, and it tells you what the average close or open, whatever you'd like there. And that's this midpoint that you see that comes across here that separates the blue from the red. It then sets up a spot, what's called one standard deviation, or how you said it. I have mine, one standard deviation to the up and one standard deviation to the down. And it gives you a trend of what's going on in the market. And what I'm pointing out is on the daily chart, you can see the Qs are still headed down. It's the bottom line is, whether you think the market is up or down, this thing doesn't lie because it looks backwards to tell you what's going on. And you can see they're coming back towards neutral, but they are still, the inclination, like you're saying, the momentum on the daily chart still shows us a little bit to the downside. And that's where it's easier to go to the downside than it is, or it's easier to follow than the trend than to break the trends. CRM getting hit here. That's not too surprising.
Oh man, someone just dumped a whole bunch of Bitcoin. Look at that drop.
Yeah, 87,000 going even further. Yeah. Again, Steve, remember that 1,000 either way on Bitcoin is usually just going to be those perps getting liquidated one way or the other. People got too bullish on the GameStop news, most likely, and
it seems like everything is falling here.
Yeah, Pick is now down -500. I didn't see any news.
Pick is 1761. I called it the 1760. That's where I said it would probably go to. There it is. Boom.
Yeah, that was an easy trade this morning. I mean they don't set up much easier than that.
That looked like to be a.
Yeah, you said it was a bull trap. It was set up.
Yeah, I think it's a computer. I think it's computer trading here going on. Wow, still more.
And again, Nvidia now down 3.62%, getting closer to the areas that I like it for a liquidity buy here personally. That's really the big one I'm honed in on today. I could be convinced to look at some of these crypto stocks too today that are pulling back a little bit. Mara, I like here. Again, though, Mara, I'd want to pick up. I like picking that up usually closer to this 13 area here. So I wouldn't be that much of a buyer here. I'd be looking below 1338 would be my zone here that I would start to look at it. What else? Coinbase 198. Let's take a look at Coinbase's chart here. See what we got. I don't like the look of that either right now. MSTR at 332.92, making a nice comeback here. This one you can see though, you're curious. I got to pull off the old drawings on here. Let's take a look at this one. So we can see on the daily chart here that, in mid-January, the last time that it made this drop down, its key resistance on MSTR was right at that 350 spot here. So that would be a zone that I'd be selling, not buying here into that zone at 350. So keep that up. I do see Mr. Currency himself has entered the building here. We're going to get him on in 1 second here. Mr. Flanagan, how are you doing today? Hey, you got the note to have the matching jersey on. I like it.
Love it. Yeah, I'm doing very good. Pretty busy day. A lot of focus for me on sterling right now. So I hope everybody's doing well midweek. I call it the hump day in trading. Highs and lows get made out of a Wednesday. And you follow Thursday to see, do we continue? Or does Wednesday put the high or low of the weekend?
Right, absolutely. So I'm going to pull up here, Steve, get right into the DXY with you. We're right at your spot. I mean, you called where we'd be headed to. We're right at that 104.47 area here. Are we going to break this resistance and go back to the days of King Dollar? Or can, we keep this in this trading zone here?
Well, what I'm looking for right now is this is a tough level, 104.40. I want to make sure we break above this level on a daily basis. If we do, 105.80 would be our next turn. I mean, supporting that move, you've got the durable goods number today, totally surprising the market and being on the upside, not the downside. So, there's a lot of good reasons to begin to look. The Fed on this slow path to reducing rates keeps the dollar, in a pretty good spot as far as interest rates go. So, yeah, I do think we'll see a break of this 104.40. If we go into some of the component parts of it, if you have a euro dollar chart there, we talked about a 108.05 level, and we are now decisively beginning to ebb below that, presently around the 107.75, a close below 108.05 in particular. If we take in last week, we closed around the 108.15 level. So we're beginning to make headway on the downside. Euro, of course, has over 50% of the makeup of the dollar index. So if you really want to get in and look under the hood, this is the one we want to focus on.
Right.
And the situation in Europe is continuing to be in flux, let's just say.
Absolutely. We know that. And, as Barclays came out today and made it very clear that, they would be looking at the big R word there of the 25% tariffs came. Their CEO of Barclays Europe said that it would push the Eurozone into a recession, given the substantial export volume to the US. So
that's right. And, if you have a chart in sterling there, I just would like to highlight this. This was really where I wanted to focus on today. Because you had the finance minister Reeves speaking before Parliament. And, I just want to underscore in the currency world, this is why a lot of my reasoning on the king dollar idea, and I'm looking for that to be really May, June, where that begins to take off. Right now, we're going to probably stay in somewhat of range trading, but suddenly increased global, and here's that word we're talking about this week, uncertainty, has had two consequences. One, public finances. Well, duh. And two, the economy. I mean, come on, what are you trying to tell us? But all of a sudden, they're making major revisions to what they talked about in Q4. So if we are that far off of our predictions and our forecasts from the government's point of view, how can we rely on their speech before Parliament giving us the next 3 years of economic look? We can't. The uncertainty in the world is underscoring all this. The UK is now expected to borrow 47.6 billion sterling more. That's $61.5 billion more by the end of the decade.
Wow.
The tax to GDP ratio is forecast to be the highest since World War II. So all of these things, now she did say she promises no more tax increases on top of all the tax increases that were just passed.
Right.
But, how can we rely on these forecasts of their rosy economic growth? The fact is that GDP is coming lower based on data that has been released. And so I'm very bearish on the sterling. We're presently around the 128.85 level. We've taken out this, we're not yet. The key level of support in sterling is, and if we get through that, I'm looking for a quick slide down to 127.5. So, uncertainty is the word of the day. It's the buzzword. It's the way politicians all hide, as we see with the UK.
Right. And I'd have to ask, Steve and I were talking about it, what I've noticed is the general malaise out in the world right now. I have family members, he even said his mother called him, worried about Social Security and Medicaid. Are these things falling off the face of the earth? And it's something that I never thought I'd hear, these people. It isn't like, the fringe that's now talking about these things and is nervous. And we're just seeing the nervousness across the globe, right? We've got war, and this isn't, based on our government. This is just based on everything we're seeing. Things aren't doing well in Turkey. Things aren't doing well in Syria. Things aren't doing well in the Middle East. Now Sudan, Norway's pulling out of Sudan their embassy because things aren't going well in Africa. The Ukraine doesn't seem to be moving in the right way. There. So I do think that it's not just, defined here to the U.S. It just seems that right now there's just a lot of strife across the globe.
Absolutely. And were we to continue along the past path, they just keep putting Band-Aids on all these little areas.
Right. Yeah.
And the fact is that there are some fundamental changes that are beginning to take place. Namely, you're going to rely less on government spending and more on the private sector. And that's not a switch that goes on off. That's a process that we must go through. So yeah, I'm quite concerned about geopolitical risk throughout the world. Until I see a peace accord in the Ukraine and Russia, I worry that could flare up at any second. Until I see a peace accord in the Middle East has been a tinderbox. It's been a tinderbox for 2,000 years. So that's not
Yeah, no, it isn't a surprise. I mean, yeah, they've been fighting for centuries. It doesn't stop.
You know, all these areas of the world that create uncertainties only reinforces my thesis of a king dollar once we get out between May and June of this year, where I think that is going to take over because what does the dollar become? It's the reserve asset of the world. It's where people want to park their money. And where else are you going to do that? You can't do it in Europe, which is kind of the forefront of a lot of the world uncertainty right now.
Sure. Yep. Steve, anything else on the economic calendar you're watching this week? We got PCE on Friday, of course.
Well, that's the big one. You know, does that come out on the softer side? And if it does, that could be very significant because as I have been, my personal forecast is, as evidenced by the UK, suddenly their CPI was lower, 0.4, and it wasn't higher. So I am looking for that number to be softer. Does anybody living in the real world not look back over the last month and see that gas prices have been coming down? And
so are you seeing that? Because I'm seeing the opposite here. In other words, gas prices have gone back over $3 here in Ohio. We were down at $2.20 just a few weeks ago. So I've seen gas prices move in the opposite direction, while eggs and some of those grocery things have come down that we were hoping, you know, and waiting for that craziness to kind of come down. Gas is the one that I think has people back at elevated worries, so to speak, about inflation. You know, now, in other words, my locals have stopped talking about the price of eggs, and now it's back on gas.
Okay, and I'm not going to disagree with you on that. Perhaps a slight increase, but we're talking about a slight increase in March, in the last week or so.
Yeah, well, that's what people. That's the problem. Is every data point is affecting these markets. We have volatility. We can't see movement go to the upside. Hold.
Right, but we're data dependent, and it's a rear view mirror look. And during the month of February, everything was lower. And into the
first, I see what you're saying. Yeah. Okay. Right.
The first 2 weeks
numbers that come out on Friday are really, I forget that sometimes. I'm always talking about just the general attitude of people as opposed to, I see what you're saying. Right. PCE, because it was last, we're driving that thing backwards. Yeah. Ron actually came up with $3.19 for gas. So Ron, I was wrong in understanding the question correctly. Is that right? Is that what Steve is pointing out is that we drive a car forward with looking in a rear view mirror here with our Fed, because that PCE data is going to be February's numbers. Right. That's what I was getting upset about, because I was buying it for $2. I was as excited as could be last month.
So, and this highlights the key reason.
You just hit it right in the head. I just wasn't there yet. I hit my head last night, so I'm a little behind.
But you are precisely right. When we who are involved in the markets, whether it's retail, professional, institutional, we are looking out of the giant mirror window in front of us at the market, and we see gas has come back up in March. But the central bankers are data dependent.
They're all looking at last month. Look how good it was.
So what's going to happen? I expect Friday's number to be slightly softer, and suddenly the euphoric rise is going to happen in the market. Wow, the Fed's going to be able to cut, and then what? The following month you're going to see a slight uptick. And so, but this is the silliness in being so data dependent on a look back window.
Yeah, it really is. But we've been facing that forever. Only money looks first, right, Steve? So what else? What other charts are you looking at today? Do you have any for us to bring up?
Well, the CAD is, doing pretty good. 142.50 right now, roughly. It's right on the support level. Mark Carney taking a page right out of Trump. All of a sudden, they're talking snap elections. And what's his big mandate? Suddenly he's looking, hey, buy Canada. Canada needs to insulate itself. So, not a bad idea. It does stir up, as we talked on Monday, a little bit more of that nationalistic type, but it's going to help him in the election, in the snap election. So that's not a bad thing for CAD, and CAD's sitting right on support here. We may see CAD slip, to a 141, 144 type of range trading. As I've highlighted, dollar CAD loves to get locked into a range, and it'll just stay there and put you to sleep for for a protracted period of time. So outside of that, I look at the dollar yen. That's my key, always my key indicator. Trading around a 150.5 level. It's broken through the resistance point of 150.20. Market is well long of yen right now. So this could be a snap move here, back up to around the 152.5 level, 153, which is the point where I would look to re-enter a long yen position, short dollar, because I like the yen. Yen is in a protracted period of raising interest rates, presently at 0.5%, but I am expecting their next meeting to raise another 0.25%.
Awesome. Yeah, and you can see where I have it. I did notice most of the Japanese trading houses have gotten beat up pretty hard this last couple of days here. I've seen some value there personally that I was looking at too. Some of the ones that Mr. Buffett bought recently more of. I was looking specifically at MUFG and SMFG.
Yeah, but in a world that he lives in, when it drops, this is just another avenue in which
it's another buying avenue. Absolutely.
Yeah. And in the longer term view, or medium to longer term, yen or Japan is probably, my number 2 investment outside of the US, because I see the Japanese economy as already have turned the corner. And, what the world is still facing, if we look at China, while China's stimulus and all that talk has put it on a big boost up, but look at China is becoming entrenched in the deflationary environment that Japan fought for 20 years. Unless we see a more decisive action on the Chinese part in addressing deflation, China is not an area that I would look, despite all the AI innovations that seemingly daily keep coming out. I kind of look at that as, just a little bit of smoke. It looks good, but when the dust settles, it's probably not a good place unless they start doing some real aggressive stimulus.
Yeah, without a doubt. Wanted to ask, we did talk about Mexico and the peso here. Still holding above 20, the $20 range.
That's right. MEX is something, with 9.5% interest rates. I do like the MEX. I don't want to just jump in blindly. I still do think that you could trade, up to around 2030 on the top side. But we had talked quite some time in MEX at 20.02 as a major support. Once that broke, now we're going to trade and oscillate both sides of that. But I do like MEX at a 9.5.
Really see that on the 4-hour chart, which Steve's talking about here.
Yep.
Is once it broke below this resistance, it's now sort of using that as its magnet that it keeps coming back to on any move up or down.
And I would watch for very positive comments between the U.S. and Mexico. The new president there in Mexico is actually, really moving quite quickly at addressing some of the fundamental problems within the Mexico's economy. They've got to address a declining economy right now. And yep. I think that they will move with the U.S. very quickly here. So MEX is something to keep in mind, but I'm not looking for a strong move as we had seen for months and months and months of a long MEX position, but it is a high interest rate currency. at the proper level, and I'm looking around the 2030 level, that's where I would perhaps look to begin. And this is what these big giant asset managers do when they've got, several $billion to invest or park. They're going to yield 9.5% interest rate at the appropriate level. They'll jump into the mix again.
Absolutely. Getting a question here. What are our thoughts on gold? Central banks continuing to buy? Yes, they definitely are. We've had Peter Thomas as our gold expert there. He has been all over it. I actually will be putting on an interview he did with Steve last week later today. So make sure you're tuning in to Quasar Markets all day. We'll get you that info. But yeah, gold, while it's stalled out here in that 30-20 area, most calls we're seeing are for, breaking 3,100 and continued move to the upside. That doesn't seem to change. In my personal opinion, you have any thoughts on gold yourself there, Mr. Flanagan?
Well, some of the articles I've just read today, I'm quite wondering that the imports to the United States have been January and February record highs, which has aggravated our trade deficit. But why is so much gold coming back into the United States in January and February? What's that all about?
So Peter Thomas talked about it, and he actually was using it. They actually send couriers over there, but that they actually bring that on regular planes.
Yeah.
That is how they actually bring the bullion over. There, he was sending some people. He was talking about his company that he uses over there for AU Secure that does it. He does that. It was tariff-based. It was absolutely tariff-based. It was the concern of tariffs. People want to get this, there's still a huge demand in the U.S. for buying physical gold, whether it be in bullion or whether it be in coins. And he was one of the companies that was bringing a ton in. So, and I don't mean a ton as in a full ton, but bringing a lot in. And he gave that as the reason. The threat of tariff just had people worried there, but it's also a flight to safety. He's seeing it, across the board. He advises a lot of sovereign funds that were, loading up on gold and family offices, quite frankly.
I get a little worried sometimes when I'll equate this to the early 80s when gold was under $400. And, I had read an article back then about if the number of option strikes at 400 were ever to be realized, the net short position in the gold market is well larger than the available physical gold.
Gold, right? You couldn't take delivery.
Bring it to today and these 2 months of high gold imports. I wonder if the ETFs today, if many of the short positions that are seeing the way the gold leases work, if one were to say today it all needs to be covered, there clearly is not enough physical gold in the world to cover and back all those. So I worry about the financial tanglements of how these instruments work, that the net shorts would be, very high and would fuel a further increase in the price of gold. So I don't know. I like gold. I mean, you're asking a foreign exchange guy. I think gold is a great safe haven buy. I think the crypto world will act in parallel with gold. I think when the King dollar takes off in May, June, July, I would look for that also. The dollar, gold, and crypto to probably be the safe haven type places that money looks to find.
Yeah, I don't argue there with any of those things. Yeah, I don't understand. I'm with you on that with how the options, because as we know, they're supposed to be able to deliver, physical gold if requested. Can they? How does that work? That's been the question for years, right? I mean, and we've seen there hasn't been more fraud than in the gold market, right? I forget that gentleman's name that had duped the entire stock Wall Street and, had that supposed mines down in, Australia that weren't even there. That was a huge, almost, I want to say close to $1 billion fraud.
That's right.
There. So, those are interesting when you come into that type of thing. Steve, I got BigBeat had to leave this morning, but I was going to give him a little bit of a hard time because, you want to talk about calling something maybe a little too early that the bottom was in. Somewhere right around here in this green zone, somebody I know said that maybe it was time to get into the Turkish lira. And if you remember, I was very, very wary of that on geopolitical tensions.
And what did I specify as my reason for not? That you can't trust the political system. This is a system that hired the brother-in-law into the as the finance minister, and then everybody went nuts, and then he was let go, and then they brought somebody up. The cronyism that goes in with that government, and suddenly you arrest your opposition leader and you're arresting all these protesters. I mean, are they going to be seen again? These are questions you have to ask over there.
And you're in a war with other people within Syria. You might not be at war with other countries, but you are very firmly implanted in Syria, which is probably the most turmoil country in the Middle East. You know,
so while a 50% interest rate may attract your interest,
not mine.
The currency can move 10 to 15.
I'm a guy who buys cryptos that just, because they have a dog picture on them, and I'm not touching the Turkish lira. That should be a commercial for crypto.
There you go. And what happens in one headline, it's moved 10% or 15%. And that's, what we commonly call in a marketplace a roach motel. You can get in, but you just can't get out.
Yeah, no, right. No one wants to buy it on that back end. You want to talk about a dry up in liquidity there. Yep. I don't doubt that at all. What else are you watching here for the rest of the week, Mr. Flanagan?
Well, again, a highlight, bring it back to sterling. That's the big one I'm watching. I really think while they're holding interest rates at 4.5%, they've missed two opportunities to lower rates and get out ahead of this, their crumbling economy. While they're saying that the economy is expected to grow, I don't think there's any validity to their forecast. Yeah. So sterling's the one I'm watching. I'm looking for this 128.60 break and a quick slide down to 127.5. That's where my focus is on the remainder of this week.
I'd have to ask, do you think, the big three just don't seem like any of them want to make a firm move to cutting rates, but if you had to put a percentage to it, do you think that the US, the Euro, or the UK, who actually does start cutting the rates first? Does anyone get ahead of it? Or are they just all going to sit there? I hear nothing, I see nothing, I say nothing.
Well, Europe is desperately trying to say we're nearing the end of our interest rate cycle, presently at 2.5%. I would have to agree that maybe there's another 0.5% to the downside to be seen. So that puts the US and the UK firmly in the sights of being behind the curve here at 4.5%. So I would say, the worst case scenario, if I were a central banker, is that the economic situation suddenly determines my decision. And I think that that's what the US, but more the UK, is going to be in very shortly, where they are suddenly saying we have to cut rates because the economy is telling us to a cut. And I think
the rearview mirror again, right? Rearview mirror they're using. And I'm seeing, and this is where the finger pointing is going to start too. I think that is going to start to upset the market, and we'll see if it starts a little bit of a sell-off here today. Kashkari coming out and saying policy uncertainty is complicating the Fed's job.
Yes, that's it. And so what is the word of the day? Policy uncertainty, uncertainty. Because why? We know the politicians can hide behind uncertainty, saying, I don't really know what to do here. And now the central bankers are all behind it. The guy I love to follow is Fed Chicago, Goolsby. Okay, and he even came out and said, uncertainty.
I was going to ask you about that. I saw that after we got off on Monday that he got out and you had said that, and I was surprised. And that's what got me. That's what's had me a little uncertain and trepidatious the last couple of days, is that the sort of the person I thought was the smartest guy in maybe that room, he's saying the same rhetoric as the others again. And that's what it seems to be.
But watch his, you got to dissect
the word. Yeah, oh, absolutely. You got to parse it out.
In the next breath, he said he expects lower borrowing costs ahead. Now, that's a very veiled way of saying interest rates are going down. So
will that be because they move them down, or is President Trump, you made it clear, Treasury is going to pull whatever levers they have to make that happen?
I would hope, and that's a bad word to use when we're in financial markets.
We don't like that.
But I would hope that there's some sort of coordination between them. Now, I watch him because I think he is very in tune to our present highly computerized marketplace. So I look for him, and I think that was a little bit of a veiled indication that rates are going down.
Yeah,
And
I hope so.
the
We do
Fed
have a
starting
question I think would be great poised to pose to you.
to
Question is, if Germany starts spending historic money for infrastructure and military spend, does it hurt the ECB's ability to cut rates? Would they assume investors demand higher yields?
That's an excellent question.
Yeah,
And
that's why I figured it's perfect for
yeah,
you. This is
and
right up your alley.
I'll tell you what. What does it do to the ECB? It takes the pressure off of them cutting, especially at 2.5%. I would expect that interest rates get to 2% for the ECB in the perhaps next 4 to 6 months. So spending at historic levels that the Germans are proposing taking the foot off the brake is fiscal spending. And if the central bank is not totally carrying the burden of stimulating growth by lowering interest rates, the federal government steps in and uses the fiscal side. It takes a lot of pressure off of the central bank to lower rates. But they still will cut because the fiscal spending is not an imminent thing. It will take time.
It's going to ramp up. Right.
I would not expect to see that through all the political wrangling, at least until the third or fourth quarter of this year. In the meantime, I would expect 2 more rate cuts by the ECB in the interim. But that is a great question, and it is potentially a game changer for Europe.
Right.
Let's watch that one.
If they come through with what they said, what we've seen and what I've learned from talking to you when we started, especially talking about China, right, is they're great at making promises. They're not as great at following through with those promises. And we've seen that across so many different governments, including our own here, when it comes to the CHIPS Act and other things, that it takes a long time for the wheels of government to move these monies out to companies and for those companies to start utilizing it.
And real quick on that, here's the U.S. bashing Europe to spend more money on your NATO. You've got to contribute more. Well, suddenly Germany is saying this, and this is exactly what we want to do. We want to build up defense. And, looking at UK Treasury Reeves, she did indicate more money being spent on defense. That was a big highlight that she did make. So we know from the U.S. side, defense spending can be such a tremendous stimulus to the economic performance of a country. So that's a positive, but it's going to take time to play out.
Absolutely. That's the key, is these things don't happen quickly, not like the money system does, not like the FX markets that move instantaneously. Mr. Flanagan, thank you so much for joining us. We'll have you back, of course, like we do every Friday back here at 10 o'clock to go over everything around currencies. I'm going to stay on here. I do have Kirk Spano coming up, a hedge fund manager that gives us great insights here. So again, thank you so much, Mr. Flanagan.
You're welcome. See you on Friday.
See you Friday. Okay, everybody, let's take a quick look at what's going on in the markets here. We'll bring up my screen. This tick is still slightly negative. We can see it's down about 60. I actually moved positive here, but slightly negative on the tick. Advanced decline, which gives us whether more stocks are trading in the green or the red today. We do see that's negative about 1,500. VIX, which I clearly brought up earlier today as being a buy at that $17 range when it broke into the liquidity zone I was looking at here. You can see that on my chart. Nicely back up to 1768 here. So if you followed in this morning on what I told you, and I gave you the exact trade, we were looking at longer dated call options for April. You had a nice win already. So, make sure you're watching those things. SPY so far is negative about 35 basis points here. Did get as high as 576.33. Now trading at 573. It is back below the 200-day MA. It is an important line that retailers or retail traders tend to look at. So keep that in mind, that this is the line in the sand, so to speak, to watch today. It's at 574.14. So anything below 574.14 keeps me a little bit bearish on the market here this morning. Anything above that would keep me a little bit more on the on the bullish side when it comes to the SPY. Q is down almost a full percentage point here, back at 488.76. Trying to bounce off that support level here. I've marked at 487.07. You can see how that was a key level here of resistance that turned into support back starting all the way in June of last year. So that's sort of the line I'm keeping here. But last 3 days, we can see it's traded in between that support zone at 487 and that resistance from the 200-day MA that right now is sitting at 494.39. So we do see that moving that way. The RUT, which is the small market cap, is doing the best so far, only down 25 basis points here. It has been on about a 10-day winning streak, so we'll see if that continues. And lastly, if we look at the Dow Jones, which is up about 37 basis points here, back at 42,744. It is the only index above the 200-day MA currently and continuing to move to the upside here. So again, Dow Jones industrials are moving up. To me, one of the things we talk about, right, is, and I talked about this yesterday, that a lot of different areas where we were seeing growth in stocks right now are what we call defensive stocks that do better in times of turmoil. Some of them tend to be the oil energy companies. So let's take a look at the Spider Select funds here today and see what is going on. So as we look across the Spider Select funds, and again, this is the way that we can take a look at the 11 sectors of the S&P 500, get a little bit of a better macro view of what's going on. And if we look, energy sector is leading the way today, up 1.5 again. So again, what does that mean? It tends to mean that, threat of war, these things has those markets moving to the upside on energy. Utility is another one, up 58 basis points here. We do see consumer staples up 92 percentage points. Or 92 basis points. Big loser technology today, which was the big winner yesterday, down about 1.29, and we see just consumer discretionary. So what does that tell me? People are feeling that the core necessities are where money is going to be spent, right? People are going to spend money on energy because you don't have a choice. You need to buy that gas to move your car. You need to buy the heating oil if it's cold where you are, or you need to buy the electricity to refrigerate whatever you need. So that sector is moving up. Utilities are the things that we need to get by again on a daily basis. That's moving to the upside. Materials, consumer staples, things that we have to have are all moving to the upside. The niceties of the world, technology, consumer discretionary, communication sectors, your cell phone bill, those are the things that are moving to the downside. So those are the things to keep an eye on. Looks like, unfortunately, Mr. Spanos isn't going to be able to join us this morning. He had something pop up here. So we are going to call it a morning here on Quasar Markets. Keep an eye out, though, here. I got a bunch of great interviews coming up over the next few hours here across all of our channels. And we'll see you again tomorrow at 9 a.m. Have a great trading day, everybody. Thanks so much for joining me.